Aditya Puri, Managing Director of India's most valuable bank HDFC Bank, relies on two simple traits for staying on top: common sense and discipline. You determine what you have to do and you stick to it, he says. Banking is not very complicated, and you need to keep it that way. Today it may sound silly that among the names HDFC thought of for its bank were Everest Bank of India, or Greater Bank of Bombay, or Bombay International Bank. Parekh personally went to convince Aditya Puri to head the start-up bank and promised him complete operational freedom. Parekh worried that if the bank did not do well, it would impact the equity of the housing finance parent company. HDFC Bank was set up in 1994 and was one of the first lenders in the country to receive the RBI's in-principle approval after India decided to liberalize its banking sector, till then dominated by state-run banks. A year later, the bank opened its first branch in South Mumbai's Churchgate neighborhood. Since its inception, HDFC Bank has been led by Managing Director Aditya Puri, a former CEO of Citibank. The lender has by now built a customer base of over 40 million and a network spanning 4,715 branches in almost 2,700 Indian towns and cities. Puri himself has gone on to become the longest-serving CEO of an Indian bank. Luck, pedigree and timing may have contributed a lot to HDFC Bank's success, but the interesting thing about the bank is not that it was a pioneer in everything, but that it made so few mistakes in its early life, at least none it needs to be ashamed of. HDFC Bank's big advantage was that it was quick to learn and adapt to the market. Aditya Puri's original idea was that he would create a corporate bank, where he would raise money from retail depositors and lend to corporations. This was what provided it the initial solidity. HDFC's biggest strength is its consistency of management. The same person has been leading the bank for 2 decades. Puri knows the backdrop, and his thought process is very clear and very straightforward. HDFC Bank began by offering loans to blue-chip companies. Soon it attached itself to India's emerging salaried class. It signed up a large number of accounts that received paychecks through direct deposit. As the ranks of young professionals grew, the bank grew with them, providing credit cards, auto loans and personal loans. This ability to cut out the surround sound and focus on the essentials has pulled the bank through many a crisis and many a mania, including the global financial meltdown of 2008. HDFC watches and learns things at the expense of the other banks. It's very measured and never volatile, and investors love that. This might make it a boring bank. But in banking, what you don't do is more important than what you do. But his model work-life balance doesn't come at the cost of any unfinished work. He says that when he leaves the office there isn't a single piece of paper pending or an unanswered email. This steady performance has also given investors confidence in the company's stock. Over the past 2 years, the bank has expanded its online and mobile banking channels. Initiatives like personal loans in 10 seconds and missed call services for mobile phone recharge have helped it position itself as a digital bank. These technologies are also being used to expand its presence in the semi-urban and rural areas where it has a majority of its branches. Under Aditya Puri's hands, HDFC has grown tremendously and become a charm of Indian banking sector. Thanks for watching. Like, share, and subscribe to the Startup.